First of all, I want to thank our strategic advisor, Kevin O'Leary, for taking some time with us today.
Thanks, Joel. I think this will be really insightful for business owners who are always so laser focused on growing their business that dealing with Uncle Sam is sometimes an afterthought. And of course, it's the biggest mistake you can make. You have to be planning for taxes. Let's go through these top 10 classic tax questions, and then at the end I'll give you 3 more that could be complete game changers for you in your business that I really want you to think about. Okay, Joel, let's get started. Number 1, can the business pay for my health insurance?
You know, I often see this missed, the health insurance premium deduction, especially from people who are new to the self-employment world. Now, whether you're a sole proprietor, a partner in a partnership, a member in an LLC, or a shareholder in an S corporation, you can take deductions for the premiums that you pay against the income that you make. The odd thing here is how it's actually done, and it varies based on the type of entity or the type of business that you're doing. So one thing to think of is, how am I set up? And then how are those insurance premiums deducted based on how I'm set up? Because I can tell you, an LLC, for example, against an S Corp, they are not deducted the same way. So it often is really valuable if you sit down with someone, like me for example, and go through what your health insurance premiums are and how to take full benefit of that to reduce the income taxes that you may have to pay. On a side note, there are also health medical reimbursement plans that may be an attractive option to include even more health insurance costs that you may actually have.
Can I write off meals for anyone I take to dinner if we talk about business?
You know, you would think that meals is a straightforward deduction, but it's actually not. There are some considerations we have to do in order to be allowed to deduct that meal inside our tax return. Let me just kind of go through a couple of those for you. First, there are 5 things that you need to account for in order for that meal to be a deduction. 3 of them are always pre-printed, really, on every single receipt that you get. And that's place, date, and amount. The 2 things you need to add, for example, Kevin, if I took you out to dinner, is I would flip that receipt over and I would write Kevin O'Leary. That's the person I had the meal with. And then I'd go through and kind of do a brief discussion of the business purpose and what we talked about. And if you really want to stump the IRS, you may even get Kevin to sign that receipt for me just to show that he was actually present. But those are some of the things that we have to consider when it comes to a meal deduction. Follow the compliance that will allow you to take the deduction inside your tax return.
Is public transportation like a taxi or bus or Uber that I take for business meetings or events tax deductible?
You know, when we talk about transportation, usually people are really kind of singling out just travel. So Kevin, if I were to come down and we were to have a meeting, I fly in, let's say it was an in and out day, we're only going to meet for an hour, maybe I don't want to rent a car. Maybe it's much easier for me just to get an Uber or a taxi, jet over to your office, we sit down, we talk for a few minutes, then I grab an Uber or taxi back to the airport and I fly out. The purpose of my travel would be for us to get together and to go through whatever business purpose that we had. Now, in order for me to fulfill my obligations to meet with you, I had to get from the airport to your office. That makes the taxi cost, or the Uber cost, actually a tax deduction. Now, let's take it in context of, what if I'm just here, meaning where I live, where I operate, where my business is. And sometimes cars have to get repaired, or sometimes it just makes more sense to grab an Uber and taxi based on wherever it is that you particularly live. And if I am serving a business purpose for that travel between, let's say, here in a business meeting or here in even Office Depot or Target, because I got to pick up some business supplies for myself, car didn't make sense, grabbed an Uber, went, came back, those Uber costs are a deduction. And oftentimes they're overlooked because maybe they're only $15 or $20, but I'm here to tell you that every single cost that you may have inside your business adds up, and everything goes into reducing the amount of taxes that you may owe. Never leave out bona fide tax deductions outside of your tax return, simply because it wasn't on the forefront of your mind.
Can I write off clothing I wear? What constitutes a uniform?
I can remember when I graduated with my master's degree and went to work for Ernst & Young. Now, this was many, many moons ago, if I'm being honest. And before I went and started my job, I was in contact with the partners there, and they said, listen, Joel, you're going to come work for us. There's a certain attire that you need to wear in order for you to meet with clients, to be in our office, and so forth. And that was exactly how I am dressed right now, with a suit and tie. Now, I didn't have a lot of suit and ties back then. I had to go out and buy a few, which, before you get your first paycheck may be a bit of a problem. So my first thought was, hey, if they're requiring me to wear this, can I take it as a tax deduction? Well, the short answer is no, not in this particular case. See, the problem is if I can wear this suit here, like if I'm meeting with you or when I was with Ernst & Young, but I can also wear this on the street, let's say. So I can go to a wedding, or I can go out to dinner, or I can go to a party or some type of event and wear the same suit, then it's not a tax deduction. What we call it is streetwear. If you can utilize it as streetwear, you don't get a deduction for it. Now, conversely, the way to make certain things a deduction is to put a big fat logo on it. You see lots of companies that logo their shirts or logo their jackets. They even create all kinds of accessories with backpacks, the pens, the pencils, and all this kind of stuff with their name on it. And when they do that, now I'm advertising my company. Now it's not necessarily streetwear. So if I had a big CPA that rolled right across, my shirt, I may not wear that to a particular wedding. And that's kind of the difference. If it's streetwear, I can't deduct it. If I have logos on it, now I create a deduction. Now on a sidebar, if you have safety equipment, so let's say I'm in the real estate game, I'm a general contractor, I'm around building houses every day, I gotta buy some really good steel-toed boots. Now that's safety equipment, and I can get a deduction for that. So really look at, is it streetwear or are there logos on it, and how do I utilize that particular article of clothing to whether or not it's a deduction.
Are gifts I give to clients like wine or food tax deductible? Is there a limit?
I love gifts, let's be honest. I like receiving them, and I really, really like giving them. Now, what happens in the service industry is when you're providing services to clients, sometimes they, and businesses specifically, sometimes they feel, a sense of, let's call it joy or gratitude for the service that you provided for them, even though they're paying for it, and they send you a gift. Like during tax season, I get gifts all the time. The thing to remember about gifts is there is a limit. Now, you can buy them, you can gift them, but the IRS sets a $25 limit per gift that you can give to someone. So Kevin, just be expecting that $25 bottle of wine headed your way here within the near future. But $25 is my limit. What you're trying to avoid is any type of situation where the gift is too extravagant or too expensive, and all of a sudden I gotta give them a 1099 for that gift, and now I'm forcing them to record the value of that within their tax return as income. So just remember, $25 is my limit.
If meals and entertainment are business related, how much can I deduct?
So I can remember when I was with Ernst & Young, we had courtside jazz tickets. Now everyone would always fight for those courtside jazz tickets, and I was always doing my best to tell, the senior partners why my clients were the most deserving clients to go to the jazz game. And let's be honest, mostly because I simply wanted to go to the jazz game. But those were entertainment expenses back then. With the new Tax Cut and Jobs Act, guess what happens with the entertainment? No longer deductible. So keep that in mind. Even if something may seem like it should be a deduction, if it has an entertainment value or the IRS sees it as entertainment, we can't deduct it. Now, we already talked about meals. On the meal side, yes, we still get that deduction. But if I spent $3,000 on meals during the year, I only get a deduction for $1,500 on my tax return. So it's 50%. And keep that in mind. You're only getting 50% of that cost as a tax deduction. Now, I'm going to argue that every dollar counts when it comes to your ability to reduce what you owe in tax. But just keep that in the back of your head. 50% when it comes to meals is deducted on my tax return.
If I do business while I'm out of town, is the trip a write-off? How much can I write off?
Travel is everybody's favorite deduction. Why? Well, simply, it's fun. But let me give you a story about a particular tax court case that happened down in Florida. So the IRS was auditing a lawyer, and the lawyer had included travel costs within his tax return. Now, when he was on the stand, the prosecuting attorney was asking him questions back and forth about various aspects of his tax return, and it came down to he asked him questions about the travel. And the prosecuting attorney said to the man, "Tell me about the travel." And this is how he responded. "Well, my wife was in Florida, so I went down to Florida to visit her for a little while, and while I was in Florida, I conducted some business." Now, at the end of this tax court case, that travel was denied. Why? Let's call it phrasing, if you will, a little bit, and let's go back to see what he actually said. He said, "While my wife was in Florida, I went to Florida to see her, and while I was there, I conducted some business." So what was the intention or the intent of his trip? The intent of his trip was to go to Florida to see his wife. Personal. But while I was there, I conducted some business. Yeah, that's business. But the intention of the overall trip was personal. And that's kind of how you have to look at it. What is the intention of your particular travel? Is the intention to conduct business? Well, then we look at it as a business expense. Is the intention of the travel personal? Well, then it's probably a personal expense and non-deductible. But let's say that I went somewhere for some legitimate business meetings. I had them for a couple of days, but based on the place that I was going, I decided I want to stay a couple extra days just because of its location. What about that? Well, the intention of that travel is business related. The extra days I'm probably not going to deduct on my taxes because it's personal. So sometimes we're going to bifurcate between what's business related and can be a business expense and what is personal. Then when I come back from that particular trip, one of the best things you can do to create some audit support documentation is do a travel log or travel summary. Detail out what it was that you did while you were on that particular trip. Because I promise you, if you're trying to think about it 2 years from now, you will not remember the details. Also, third-party verification or information is always great. So if I go somewhere for a seminar for 3 or 4 days, let's say, I'm going to keep all that seminar information as part of my documentation to support my tax return. And sometimes people miss that. So in the case of an IRS audit, I want as much support and documentation as I have. So can I write off travel? Yes. But let's examine the overall intention of that travel to make sure it's an actual tax deduction.
Can the business pay for my life insurance policy?
Kevin, I'm actually glad you asked me this question. The reason being is I get asked this question all the time by my clients. Can I deduct my life insurance premiums in my tax return? So let's give you a scenario. Hey, I got a life insurance policy, Joel. I came in, I'm having my business pay for those premiums throughout the year because, maybe the business does really, really well. And when you sit down with me and we go through your profit and loss statement, and I look at your premiums that you had paid and you have life insurance in there, $2,000, I'm going to tell you, guess what? You can't deduct that inside your tax return. Life insurance premiums are not tax deductible. And so when I would have that conversation with my client, I would say, listen, don't waste a bunch of time trying to figure out, well, is there ways for me to move it inside, or can I do this or do that? I mean, the IRS has some pretty specific rules when it comes to life insurance. And I would rather see you spend your time on those things that actually create wealth, create money, put cash back into your pocket. So on a basic standpoint, no, life insurance premiums are not deductible.
Do I still have to file if I don't owe any business taxes?
It's interesting that you bring that question up to me today, because just last week I had an experience that directly to this particular question. So I have a client who has his personal return, but also has a couple business tax returns to do. And I've been filing these for a number of years, and this year was no different than last year. But then he sends me a notice from the IRS. And I looked at the notice. He said, hey, Joel, go through this for a few minutes. Just tell me what I should do. And the notice had a bunch of fines and penalties for non-filing of a tax return that was due for an entity that I had never heard of. So I get back on the phone with my client and I say, hey, what is this entity? I don't even know what this is. He said, yeah, I didn't bring it up to you. I formed it last year, but I really didn't do anything with it. I didn't have any revenue. I didn't have any expenses. It was really a zero return. So I just kind of left it off our conversation because I didn't think anything needed to be done. Well, the fact is we have compliance issues for all entities. And if you think about entities, there's kind of three various parts that go into the creation of an entity, right? There's first the submission to the state that kind of forms the entity. Then there's a registration with the IRS or getting your EIN or employer identification number. And then there's governing documents that kind of tell each other how we're going to act and how we're going to conduct business. Now, when you register with the IRS and get that EIN, if you were to look at the actual letter, just below the first paragraph is a form number and the date in which that form is due. That puts you on the hook for filing a tax return regardless of whether or not that particular entity had any business dealings whatsoever. Zero revenue, zero expenses, yes, I still have to file. And if I don't file, the IRS is going to levy all kinds of penalties, could be in the thousands of dollars against you for something that was so simplistic to do from the very beginning. Now, the second thing is I'm going to argue, and which I'm going to argue with him, is that did you really have zero expenses when it came to that particular entity? I mean, every state charges you something to set it up. So just by virtue of creating an entity, you already have expenses. And is it worth the time and the effort, and I think it is, to go through and say, okay, did I actually have some startup costs associated with that entity? Now, I know I didn't have any revenue, but maybe I had some expenses that needed to be put inside that particular entity that may be available for me in future years. So regardless of whether or not you had activity inside your particular entity, you do have to file a tax return.
What happens if I can't pay my tax bill right now?
The unfortunate reality about taxes is that sometimes we owe them, right? Sometimes we do owe taxes. And sometimes, I guess, the situation arises that we may not have the ability or the available funds to actually pay the taxes that we owe. Even after we've exhausted every type of expense we could think of, all the tax planning that we could have done, you still had income, and in the end of the day, you still owed some tax. But I don't have the ability to pay. So what do? Do I not file my tax return? Oh, no. That's probably the worst thing you could do. You still have to file, because if you don't file, some future point you're going to, and all you're doing is allowing the IRS and your state, if you have a state tax, to keep compiling all these fines and penalties for non-filing. You're compounding the issue. So even if you don't have the money, always file your tax return, because there are options for you, and the IRS has a couple. First of all, first thing you can do is get in touch with your CPA or whoever's doing your taxes and say, you know what, I don't have the money today, but based on my operations, let's say over the next 60 days, I think I'm gonna have the money and the ability to pay then. Well, your tax person like me, for example, can simply call the IRS and say, hey, my client needs 120 days to pay. Don't sit there and send them letters and make them nervous, because I know what people react to when they get those wonderful IRS letters. But they'll put everything on hold and say, great, we'll give them 120 days to pay. We're not going to send them anything. It's going to stop all the letters. And then your job within that 120 days is simply to pay the taxes that are due. Now, if you don't have the ability to pay during those 120 days, you can go into what's called an installment agreement. An installment agreement with the IRS allows you to pay the tax over time. And it's actually really simple. It's a form that you would send in. In fact, you can even do it on the phone, or you can actually submit it with your tax return. And typically what happens is they take the amount that's due, they divide it over 72 months, there's an interest rate that's associated with it. You can set it up to where you're sending in them checks each month, or they have the ability to direct withdrawal out of your bank account so you don't even have to think about it. And then you can set up a payment plan with the IRS in order to pay for the taxes that are due. So you do have options. But remember, I want to file first and then sit down with someone like me and let's explore your options and see what you can actually do and what's best suited for your particular situation.
All right, thanks, Joel. I'm sure those top 10 questions and answers have been very insightful for many business owners. Now, let me ask you 3 additional questions that every business owner should be asking. 1, do I have the optimal business structure and entity for my business?
First, let me tell you that there's no perfect entity for the business that you're doing. There may be ones that work better than others, and that's worthy of a conversation. And there are always pros and cons to whatever it is that you're doing. Some cost more, some require payroll, some are better for benefits. Really, you have to look at what are your particular goals. Is it cash management? Is it reinvestment? Is it employees? Is it benefits? And then you look at how to house that in a particular entity that's going to work for you. Let me give you an example. So I like to travel, and I like to plan out my travel. I think it's really enjoyable, actually. And one of the things I like to do is look for my rental car because I love cars. And when I travel, it gives me the opportunity to rent something I don't normally own, drive it around, and give it a quick review in my head, if you will. Now, based on where I'm going, it's going to depend on the type of car that I'm going to rent. And what are the activities that I'm doing there? And how many people are coming with me? And what's the amount of luggage I got to take? I mean, am I going to be surfing or biking or hiking or just sitting at the beach? Or am I going up into the mountains? And is it wintertime? Am I going to ski? So if I'm going up to the mountains, I'm going to need a car that has four-wheel drive, that maybe is a little bit larger because there's four of us and we have skis. Maybe I'm going up to the mountains, right? So really, the vehicle is going to depend on what it is that I am doing on this particular vacation. And that's kind of how I would look at my entity. What is it that I am doing? What is the travel plan for my business? Where am I going with this particular operation? And then when you know the destination, then you take a step back and say, okay, what entity optimizes that particular travel? And that's worthy of a conversation with someone like me that can sit down, give you the ins and outs when it comes to entity structure, what's required from a tax return standpoint, what deductions or expenses are allotted to you based on the type of entity that you are. But really that discussion has to take place, and I'd be looking at it as optimizing my travel between point A to point B, and the entity is simply that vehicle.
Am I maximizing my retirement savings and using the right vehicles to achieve my goals?
You know, I often get asked by friends and neighbors who know that I'm a CPA. You know, sometimes they'll corner me, whether I'm walking in front of my house or maybe doing some gardening, and say, hey, Joel, I just had a really quick question for you. Just off the top of your head, just give me a couple ways that I can reduce my taxes. I think I'm paying too much, and I just maybe would like to get a little bit of information. The three things that pop into my mind immediately are you spending money appropriately? Are you connecting money appropriately? And a big one is, are you deferring money appropriately? And by deferment, I mean retirement plans. Oftentimes, people think of retirement plans as simply, hey, do you have an IRA or a Roth IRA? Or maybe you have a 401k. But there are all kinds of retirement vehicles that you can utilize, especially being self-employed, to not only provide cash flow in the future for you in the form of retirement, but also creating tax deductions today to reduce what I owe. For example, with solo 401ks, if you have the income, you can be contributing upwards of over $60,000 to that particular retirement vehicle. That is an enormous cash savings when it comes to your taxes. So you want to maximize what it is that you're doing within your particular operations, and you can't forget about retirement plans. So looking for a way to reduce your taxes, looking for a way to maximize your operations, sit down and have a conversation about what retirement vehicle will work best for you.
Does my CPA help me have continued and sustained tax and payroll compliance to significantly reduce the terror of an IRS audit?
I mean, thanks, Kevin, because that is a great question to ask yourself. I understand the horror, if you will, of getting an IRS audit or getting that IRS audit letter, because really that's how the IRS is. It's their preferable way of auditing people nowadays. It's a lot cheaper. Computers are often doing a lot of the work for them. You go out to your mailbox, you open it up, take out your letters, and you see that wonderful IRS logo at the top left. Your heart drops, sinks, you open it up, and realize that the IRS is looking at you from an audit perspective. And it can be really, really nerve-wracking, terrifying, especially when you don't deal with the IRS on a daily basis. And that's kind of what people like me are for. So first of all, I'd be going through that exercise is, does my CPA support me in a way that allows me to free my mind from that sort of terror from the IRS audit, because I know I am protected? Because really when we're looking at a tax return, there's a couple things from the CPA standpoint that we do. I mean, it's not always just compliance. Number goes here, number goes there, this number then is transferred to this form. There is a certain amount of art that goes into a tax return as to not create any types of red flags within a tax return that the IRS may attach themselves to and then mail out that horrible little letter. So we want to look at those types of things. The tax return itself, as well as maybe documentation that goes into it. Because I'm kind of a believer that a tax return isn't just the 1040 form. So if you were to come in and sit down with me, for example, and we went through and we did your tax return and we complied with the law and sent in your 1040, what I would get back to you wouldn't just be your tax return. It would be a bundle of information in folders that had your tax return and all of your support. All of your support from a documentation standpoint is part of your tax return. And really it's that documentation that goes behind it that should give you the peace of mind to be able to free yourself of worry when it comes to an IRS audit. But definitely, without question, you should be working with your CPA January through December, doing all the tax planning, keeping your records up to date, meeting with them, talking about strategic ways of reducing your taxes, but also the requirements of keeping that documentation to safeguard yourself from IRS audit.
Thank you, Joel. It's been my pleasure. And if any of you watching today have any doubts that your current CPA is not helping you take 100% advantage of the deductions you deserve and helping you stay compliant with the IRS, then don't hesitate to get involved with TaxHive today. You won't be disappointed.